Moses, thank you for taking the time out to join us today.
Yeah, thank you. Well done. Good afternoon.
So we're expecting the market is still expecting a Q3 earnings from banks and especially the tier ones. What is your forecast in terms of what these numbers are going to say, and perhaps who you think will be the biggest winners and losers?
Well, still a lot of uncertainty around that, but we expect some of them to, some of these tier one names to do better in Q3 compared to Q2. Recall Q2, we're still struggling around the lockdown. So with COVID-19 and the effect of lockdown flattening out small, we expect some of them to give us better numbers. However, there's still risk in the economy. So most of the quality, in terms of credit quality, will still be weak, and we expect impairment to still be higher, especially on a year-on-year basis. So that's generally our expectation for banks, but we expect them to do better than Q2, given the improvement in economic activity so far.
But what is your outlook for earnings for the banks going forward? We know that the economic outlook is still bleak. We're still going to have to count the exact cost of the pandemic when it's all over, when there's a vaccine. And we know that projections are not so encouraging. But what does this mean for bank earnings in terms of where they're going to be looking for new opportunities, given the low rates or yields we're seeing at the government securities market?
I think for banks, most of them are already looking for a way out. If you can see, most of them are already getting an ODCO certificate or license rather to operate in other segments, just a way for them to diversify their earnings. I think they are looking at the way a institution where the revenue is shrinking from conventional income. So they are looking at how they can get income from other sources. And I think that's one of the reasons why some of them are going to ODCO structure now. So which I think in the long run should help them to manage their risk and their earnings going forward.
So final question. Next week, we're expecting the MPC to meet and decide on interest rates. What do you think will be high on the agenda for the MPC?
I think for them now, the question is going to be around the inflation and FX situation. I think that's the major issues that we expect the Monetary Policy Committee of the CBN to talk about. Most importantly, inflation. We look at the last inflation figure, 14.23%. It gets to the level where people are getting concerned, and what's going to be the approach by this Monetary Policy Committee. We know they have been looking at growth for a point. We just have to do something around this inflation number that keeps increasing. And if you look at FX situation, it's not getting better. Naira currently, the parallel market around 470. Pressure remains in that market. So there's a lot of questions around that, and it will be interesting to see how they handle those issues. Generally, we don't expect them to adjust anything, particularly monetary policy, given the fact that they have cut rate twice already this year, and it doesn't look likely that they will do that. It's just for them to wait and see the impact of the last cut on growth, and most likely see what they can do to manage inflation and FX risk going forward.
But what is your outlook for the rest of the market? Come back to trading at the stock exchange.
Well, we expect interest to continue in the equities market, given the low interest rate environment in the fixed income space and the high liquidity in the system, so which have been finding their way into the equities market. So we expect that to continue. Even investors, if they want to take profit now, the question is where would they take the money to? Yields are quite low. Yields on 1 year paper is below 1%, and I'm not sure a lot of people will still be interested in that market. So it's a situation where we think is very good for the equities market, and looking at what's happening in the oil market now because of this vaccine that's coming up from Pfizer and other producers of vaccines. So this is actually giving good positive sentiment around oil price, and that should, in the long run, trickle down to our economy. Although that may also mean higher PMS price going forward, given the removal of subsidy on PMS. So it's those factors will still play out in the equities market, but generally we expect buy interest to continue, given the sentiment yields on some of these names on the exchange, and we expect them to even improve going forward.
Now, as you said, we have seen this rally at the equities markets being driven primarily by low yields at the fixed income market. And we've seen the B caps, the bellwether stocks being some of the biggest winners. And we've seen many investors, new investors, local investors now coming into the market and traders tell us that the fundamentals justify, apart from the fact that there are low yields at the fixed income markets, the fundamentals of many of these companies justify the rally and the price increases we've seen. But I want to ask you, away from the usual suspects, other sectors like ICT, perhaps even in the agri sector, what other opportunities should investors be focusing on within the market?
I think we can also look at cement and consumer goods. Brewery for a long time. For now, the outlook for breweries in the near term is not looking so bright. But in the long run, I think they can still do better in the long run. And for cement, your Waco, your Dansen, your Boa Cement, those companies are still likely going to recover in the long run as well. And you can also look at Agri, Cocomo and Fresco. These are good names in the agri space that you can also look at, apart from the German banking names, which is there are still opportunities in that space. I think there are still opportunities in the equities market. Even if you do your evaluation, given the lower interest environment in the fixed income space, some of these stocks will have a better upside potential than what we see today. So I think the outlook is still good, and we expect, hopefully, the rally will continue, and we expect the economy to continue to recover in the near term. But the general perspective is that the weaker macroeconomic condition will still limit the expectation for growth. But anyway, we advise investors to buy for a long time while they position into quality names.